Hi, welcome to this video, which is on the 1st of January. We are on Wednesday. We're just going to give our update out for the Japanese yen today. We're going to be looking at it against the NZD, the USD, and the Euro, and we will go to the charts in a moment. Now, a few days ago, I did do a video that covered USD, JPY, and Euro, JPY. I'm going to update those pairs in this video and add in NZD, JPY, because I think it looks a fantastic risk to reward trading opportunity. Now, I mentioned in previous videos that back end of December through to the first week of January, which we're obviously in now, you very often find that the majority of currency pairs form their high or low for the following year, and statistically it's over 70%. So it's a great time to be looking out for big moves. Now, in terms of our trading strategy, we do a lot of swing trading, shorter term trading, but we do like catching the big trends, the ones that are going to continue for a long period of time, and try and get in at the turn. And I think in terms of the yen is going to confirm a major move to the upside. It did that last year as well. I think it's going to do it this year. Now, in terms of the yen, we are going to go and take a look at it right now. But just please do keep in mind, it is my view. As of right now, it can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can get live access to our member centre on the link beneath this video, and also a limited New Year discount on membership as well. Details beneath the video. Now we are going to go and look at the charts. I'm going to start with NZD JPY. All right, just on the NZD JPY monthly chart, just very quickly, just see the big levels. Then I'm going to shift over to the daily chart, draw levels, entry, stop, and target, and also go through the fundamentals and sentiment behind this pair, which point to a turn down in the NZD. Now, you'll notice already I've drawn a level in here, which is really the 73 to 73.50 level. And it's significant. You can see, hold it here, bounce up, get through on the tails, but keep coming back above, again on the tail, back above. But that's a decisive red. That red, the top of that red candle, should hold the rally. Now, in terms of coming up to test level, I just mentioned, we can go through it a little bit. We've got the 20-month moving average there as well, which we're looking to contain the rally as well. Now, in terms of first level support, let me just draw a trajectory. It's going to be at the base of this month's candle. You can see there we go, some higher highs. So basically 70, so 300 pips from where we are now. But in terms of the way the fundamentals and sentiment look, I think we're going to go back to 60. So around 1,300 pips from where we are now. And yeah, I think for long-term trend followers, this looks a really good pair. Right, let's go to the daily chart, go through the fundamentals and sentiment, also draw levels of entry, stop, and target. All right, NZD JPY daily. I'll do my technicals in a moment. Now, just for anyone new watching our videos, when you see our technicals, we don't do anything complicated at all. It's all very simple, okay? And the reason we can keep it simple is, we're looking at the big fundamentals and sentiment behind the chart. And in terms of the technicals, you just look at this move up. It looks like a strong uptrend that could well continue. I think the uptrend now, there's warning signs in the fundamentals and sentiment. It's on borrowed time, and the Kiwi will have a big move to the downside. So in terms of fundamental sentiment, let's take the points. Point number one, 67 level down here. We know that speculators, just generally in the Kiwi, the all currencies, you took the Kiwi overall, basically speculators had a record net short position. So you've got a record net short position, too many speculators short, and we rally up. Now, speculators have now been taken out of the market. Okay, we can see this from our favourite sentiment tool in Forex trading, the COT net traders position. So speculative short position has effectively gone. Okay, now also helping the Kiwi against the yen is stock markets. They've been strong, okay? And if you get strong stock markets and risk on, that will help the Kiwi. Also, the Kiwi has rallied in anticipation of the China-US Phase 1 trade deal, which I'm sure most people have seen in the media. I think that's discounted in the price now. And it's not really a deal anyway, is it? It's just a truce. Now you've got a proxy risk-on currency, which is the NZD, and the number one safe haven, which is the Japanese yen. Last few days we've seen the rally pause. I think we're going to get a break very, very shortly to the downside. Now the yen is just generally oversold, and we know the commercial smart money on the COT net traders positions are building up yen longs. Now, in terms of why people have been bearish of the yen, obviously we've had risk on, okay, but they also see the Bank of Japan possibly cutting rates. There'll be no more rate cuts. I covered this in detail in my last video. They're not going to cut rates. The Bank of Japan asked the government, basically for fiscal stimulus to boost economic growth. They said they couldn't do it on their own with monetary policy. And basically the government has done a massive fiscal stimulus package which will boost growth. Bank of Japan don't have to cut rates. And we've got the potential for risk off as well, in our view. We think the stock market rally is on borrowed time. The reason I say this is because volumes are very low. I did a chart on my Facebook page which shows that we just go a little bit higher due to the way option positions are. You could get 8 billion short sales. Gamma very high. You can go and look at my Facebook page for more details. So we think bad news is in for the yen. The good news is in for the Kiwi. Now we've already seen the monthly resistance level, and we're kind of there, aren't we? Obviously just above 73. This high here on this blue we think should hold. I'm just going to go across there. It's a round number as well, so we know we've got a lot of turbulence, or when I say turbulence, I mean there's a lot of order flow around round numbers, okay? So at the minute, pushed above the 73 level, and now we're sitting on it. The volatility has dropped. Are we going to go higher? Well, we could, okay? But all we're going to do is say if we come through this level, I'll just draw a trajectory. If we come through this double trend line support and clear the round number, and I want it to go through 72.80 to confirm or get us in on the short side, we then think basically the Kiwi will sell off hard to the downside. Now in terms of stop, where would we put our stop? Well, I'm not going to put it here. Okay, I'm going to go one level back. I'll go through how you could sell a rally as well. I'm going to go behind the next round number back, behind that big red that we looked at in the monthly chart. So behind the 74 level, well clear of round number turbulence, and we go 74.50. Okay, now if we break down, I'll be looking for follow through, and we saw the first level of support on the monthly chart at 70, and I do believe the way the yen is so oversold, and with this fiscal stimulus package, and market pretty bearish of the yen, also the potential for risk off, we could go down, of course, to 67 and then follow on to monthly support. So basically, obviously you've got to play the trade as it goes, so to speak, or monitor it, but we're looking for a move all the way down to 60. So I just like the look of this pair. I just think it's getting ready to break down. If she breaks higher and we moved up to test 74, we'd probably just take any weakness off that level at all and then put our stop back behind the next round number, 75. Okay, so she could rally a bit more, but I personally think the rally is on borrowed time. Should be a sell on the rally failing to the upside. I can't do exactly, I'm going to do it in this video obviously because it hasn't happened yet, but if we break down, for us Just a great sell through 72.80. Right, let's go and have a look at USD JPY and Euro JPY. And yeah, the way the chart action looks since I did my last video, I think both pairs are getting ready for the yen to push the dollar and the euro down. Let's do USD JPY first. Just you're going to use the chart. So I remember for the last couple of pairs, this is the daily of USD JPY. We'll just discuss this chart in a moment. I just want to flip over to the monthly chart first. We'll just see the big levels. And in the last video, we pointed out this big red, significant, takes out the 110 level, also the 20-month moving average. And you can see over the last 6 months, we've been below the level. We poked back to it there, rejected. Hit the level again there, rejected. Go to the level again, and then for the month of December, a red. And I think we are now going to follow through to the downside. And yeah, in terms of a target, 100. Okay, so 860 pips odd from where we are now. If we get risk off, big risk off, this pair could easily go down towards the 80 level. But yeah, if we got to 100, I'd be very, very happy. Let's just have a quick look at the daily chart. And I said in the last video, this chart really messy. If you're just looking at it technically, it wouldn't look that exciting. It's also pretty low volatility. But what we liked about it was you come up here to test the monthly resistance, down, consolidation, back up with a big blue. And look at that one, pokes at the level, can't get through. Have another go at it there, another go at it there, and on this thread, you can't see I've skewed it my 2 lines. But these candles, yeah, lower volatility, no conviction in terms of taking out this level and running for the round number at 110. And since we did the last video, we've cracked through nearby support, which is the bottom of all these bodies here. And we've gone below the 109 level. My own view now is we should see a sell-off to the downside and rallies. I'm looking for them to fade back to first level resistance. And this is kind of our line in the sand. You can see my levels up here. There's nothing out of this trade yet at all. But moving forward, looking for a big move. Yen for us just going up everywhere. And I really like to look at the next pair as well. Euro JPY. So let's go and take a look at it. Right, Euro JPY, just do the monthly chart just very quickly, first of all. Now, in terms of this pair, I've had a short bias basically for well over a year. And yeah, it has come down. Obviously, there's some blue candles in between, okay? Bigger trend is down over the last couple of years. Recently, though, no joy with this pair because we've had a nice rally. But this rally for us is about to fail. And we think it will fail into those 2 candles there, which I'll just draw or put my cursor on. So around about the 123 level, okay? This 20-month moving average will snake down as well. So you're going to have those 2 bodies, okay? 20-month moving average lining up at 123 to be really firm resistance. That's our line in the sand. If that's taken out, then our bearish stance is negated. But if we look at the daily chart, and I was making this point in the last video, this candle here to us looked like exhaustion, and we'll sell it. So 122.50, you see a big move up. It's quite a high volume candle as well. It's trying to take out previous daily highs and get at the round number, which is just behind these candles, and we decisively fail. Then the bulls get ready for another go. That candle tail can't reach that one. Come down, find support, 20-day moving average, push off again. It's again a big volume candle. The tail roughly in line with that one there, and below that one there. Get a red, and now you've got an indecisive candle. Okay, now from our perspective, obviously we're already short. You can see our entry, it's just a nothing profit so far. But if we take out this 121 level, we should be going strongly to the downside. And we're very bearish of the euro going forward. I covered the fundamentals in my other video, but basically an economy that's going backwards, the Japanese economy is going to benefit from that fiscal stimulus, and you've got negative rates in Eurozone. Okay, got negative rates in Japan, but they're not getting any more negative in Japan. They probably will in Eurozone. So we're in. Really looking for a break at this 21 level. I want 120.80 to be cleared out. If 120.80 gets cleared out, we see a nice big red. We will add to our position, and hopefully we'll see a move to daily lows and longer term on to monthly support. Now, there are other yen pairs that look good as well. I mean, I looked at NZD JPY, but if you look at AUD JPY, that's almost an identical setup. That looks good. So does CAD JPY. JPY for us hasn't done it yet, but I think it could confirm a big move, hopefully in the next week or so, but we shall see. But that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.